Psychology is a critical component of trading. Calm traders are better traders. Your emotions will be closely linked to your account status. The more emotional you are, the higher the chances that you will make mistakes while trading. The actions of trading are simple to perform, but are very difficult psychologically. The difficulty lies in accepting rules that don't always seem logical, and in sticking to the rules strictly and consistently. Optimal trading is when your actions are completely disconnected from emotions, using rationality only. However, this situation is practically impossible. So, want to know how to remain calm while trading? Join us for a lesson where we'll learn about how psychology affects your trading, how to identify emotional states, and how to trade in the right state of mind. Before I provide tips on keeping the rules, I'll explain the difficulty involved by providing a quick explanation of the way the brain works. The brain is divided into two hemispheres, the right hemisphere and the left hemisphere. The left hemisphere is the analytical part of the brain. This part is responsible for all things objective, scientific, logical, rational, and intellectual. The right hemisphere of the brain is the part that is imaginative, artistic, intuitive, sensitive, and emotional. It also lacks any sense of time. Therefore, each time we act logically, we are using the brain's left hemisphere. The worst time to solve problems is when you're using the right hemisphere, when you're experiencing an emotional storm. Here is a simple, important technique that will help you use the rational part of your brain and disconnect from your emotions. Your trading platform includes a display area that shows the current profit and loss status for your open positions. You must remove this information from your view at all times. Simply ignore this display area or remove it. The changing profit and loss display is the trader's emotional barometer. The only thing that should interest you is the bottom line, the profit or loss at the moment of closing the trade. Don't deviate from your strategy because of the displayed changes. It's important to know how to identify an emotional trader. When trading emotionally, you'll be nervous and tense, you'll sweat, and will be very hesitant. If you notice these symptoms occurring, stop everything. You cannot be an effective trader in this state. Get away from the computer, have a glass of cold water, make a strong cup of coffee, and try by all means necessary to disconnect from what's going on in your computer at the moment. Music, meditation, or a dance are also possibilities. Whatever will help you disconnect and calm down. It might sound irrational to just go and leave everything in the middle of a losing trade, but you can't influence the market trend, and you can't take a calculated, logical action in this state. So best to relax, since only then will you be able to come back and trade effectively. One of the most important rules in trading is to trade calmly and rationally. Don't let your emotions take over and divert you from your chosen strategy. If you need to change plans, it's very important to change them from a place of understanding and calm regarding your substitute plan, rather than from a place of fear and confusion. The indecision of fear is the best way to ensure repeated losses. Traders tend to stay in losing trades because as long as they haven't exited the trade, the loss is still only on paper and has not yet become real. The moment you leave the trade, the loss is realized and the money is gone. Traders who know how to take real losses will be wise enough to exit failed trades early and to plan and move on to other trades which will have higher chances of success. A stop-loss command is a command that automatically closes the trade when your losses exceed a predetermined level. The stop-loss command exists in order to protect you from uncontrolled losses. Make sure to use it. Proper use of this command will help you, among other benefits, to overcome the problem of recognizing losses. Many traders think it's sufficient to make a stop-loss order to themselves and promise themselves they will act on it. However, most traders don't actually abide by this commitment, which is why it's really important to actually enter the command into the platform. We all want to be successful traders, but success in trading depends a great deal on your mental attitude towards trading. Attitude is not an inborn trait that stays with you for a lifetime. It's something that can be changed. To succeed, you must avoid the traits that characterize unsuccessful traders. These include spontaneity, lack of confidence, pessimism, jumping from one technique to another, impatience, constantly being connected to the computer, lack of capital management knowledge, fear of recognizing losses. Trading with these traits will result in near certain losses. Your chances of success will increase considerably if you're able to adopt the following traits: discipline, motivation, optimism, remaining logical and rational, patience, enjoying the trading itself, knowledge of proper risk management, independence, calm acceptance of losses. To become a successful trader, you must learn and understand the rules and principles of trading. Learn how to manage your capital strictly and wisely. Plan a trading strategy that is appropriate for the market condition based on knowledge and technical analysis, which we will cover later on in the course. Try to reach a stage where the trading system is working for you. Identify your weak traits and work to overcome them. Important rules that will help you psychologically. It's absolutely necessary to learn how to trade properly. If you've reached this lesson, you're already on the right track. The information you're learning will calm you down and will give you tools to handle the situations you will invariably encounter. It's important to identify where your trading actions are coming from, left or right hemisphere. If you're being emotional, stop everything, calm down, and only go back to trading once your hands have stopped sweating. Don't stay glued to the computer. You probably have a lot of other things to do anyway, so take some time to take care of those as well. The market is constantly moving, whether you're looking at it or not. Execute your trades according to the strategy you've created, and then go about your business. Enter automatic commands, especially the stop-loss command. Make sure to use the stop-loss command. That was not an error. I repeated that sentence twice, since this is a command that will save you many times from mistakes that could lead to psychological and financial troubles. So use that stop-loss command. Ignore the changing profit and loss display on your trading platform. It's an emotional indicator that will subvert your confidence rather than help you. Concentrate on the trading, not on the money. Greed will not get you the money, but proper trading will. In this lesson, you've learned that other than the actions of trading, a psychological factor is also involved which will influence you while you trade. You've learned to identify the symptoms of emotional trading. You've gotten tips that will help you be psychologically better traders and tips that will help you stay calm while trading. One of the things that will help you most in staying calm is proper capital management, which is the topic of our next lesson.